Hi, this is Julian Koma from Market Update Premium. We trade growth and momentum stocks. Today I want to do something a lot of traders are not doing. I want to go with you through 10 losing trades, and they were recent losing trades. So I lost money on them in the last couple of weeks, and I want to show you one thing, and this is how you can lose very small and how you can also make sure that you keep your risk under control, because risk management is one of the most important things in trading. I say that over and over to my members and also to the people I mentor personally. I say always the same thing. It's never to change the stock selection rules or the selling rules for profitable trades that makes me more profitable. It's always working on the downside. It's always reducing drawdowns, having tighter stop losses, trying to improve the trade quality. These are the things that at the end makes me more profitable. It's not always, finding the next big super stock, trading more or whatever. And I want to show you this in the current video and go through 10 losing trades with you. And I hope you can learn a lot. So let's start with a trade here. You can see that I took that on 24 October. And by the way, these charts are something I'm showing to my members all the time. I'm doing monthly trading reviews where I go through all my trades and show them, okay, why I took a trade and how I managed the trade, etc. So, and I'm also very transparent with them about losing trades, and one of the things, before we dive into the presentation, one of the things you must always keep in your mind is, I lose money on 60 to 70% of all my trades. The most trades I take are losers. This is also something I have to manage mentally, of course, right? I'm familiar with that and I'm making money with that, even if I'm losing so often. And the most frustrating thing, to be honest, is if I book the trades into my spreadsheet, because there are so many losers, and usually the profitable trades are still open because, I hold my profitable trades on average for 20 days and losing trades on average for 3 days. The most I am closing on the same day. So, but now let's dive into it. So StubHub, you can see that here, IPO short-term pattern, 5 stars, because you can see very tight consolidation here below a very clear breakout line. I bought into that. I bought 3 times into the stock. This is something I'm teaching and I'm usually doing. I buy 50% on a breakout at 2060. I bought another 30% at 2085, and I bought the rest at 2075. I did an order mistake here, so I'm always very honest also with myself so that I can learn from that. And I placed a stop loss 3.5% below this breakout line. So a very, very tight stop loss. This is important, right? And why do I buying in multiple steps? It's very simple. A lot of my trades have failed breakouts. They are moving just a few percent above the breakout line, then they are reversing, and then I get stopped out. And now you can do the math, right? If I have only a half position on at 2060 as an example, and I got stopped out with a 3.5% stop loss, I have a very small loss, right? I lose on 60 to 70% of my trades, but I'm usually losing something like 0.25% of my trading capital, 0.3%, 0.5%. My average risk on all my trades is 0.6% of my trading capital, right? It's not that I'm risking a lot of money. So I'm trying to lose very small, and I'm a good loser. That's very important. So let's see how that plays out. And you can see, bam, I got stopped out on the next day. Fair breakout. Market was very choppy. But in hindsight, still a 5-star setup. It's an A trade. So I handled the trade exactly as I planned that. Even if I had a mistake in the orders, that's okay. But it's an A trade for me because, I was not emotionally very involved. I just followed my plan and that's it. So Tesla, another one. It's not the best base, to be honest. So it's a 4-star base here. I bought it on 27 October. You can see the prices here. I had a stop loss 4.5%, which is a big stop loss for a stock like Tesla. You know, when I trade a stock like Tesla, I usually have a 1 or 2 or 3% stop loss on. So this one here broke out, and you could see on the next or 2 days later here, bam, I got stopped out. Close the trade, market very weak, stocks breaking down. So, and I did not stick to my stop loss here. I closed it before because of the market weakness, and on the other side, it was coming below this breakout line, you know, and I have a very clear rule. If the stock is coming back below the breakout line for 3 or 4% in most cases, but in this case a little bit earlier, then I close 50% of the position, or maybe the whole position at all, in a weak market. So, and I reviewed the trade, I classified that, and I said, no, that's not a 4-star. As I rated it initially, no, it's a 2-star, right? Very choppy base. It was not really the stock that I'm usually trading. I usually don't trade stocks like Tesla, which is, in my opinion, also lagging behind since a while. And it's a C trade, you know, it's a C trade because I said, you know, this is not matching my criteria. And I was a little bit emotional involved. I was emotionally involved because you know, I had more expectations about the trade instead of looking at the pattern and the setup that I'm trading. So very choppy trade, but you can see that here, you know, tight stop loss, it broke down. I sold that below the red line here and got out of the trade. So next one, AVAV, very good base for a 4.5 stars, big up move, nice consolidation. I got stopped out here on the same day. So I bought the first time at 389.38. It was not a full position, so the add-ons were not executed here, and I got stopped out on the stop loss. I had a 3% stop loss on, right? So very tight one. I got stopped out on the same day. Next one, EOSE, 4-star base. In hindsight, I would say it was not a 4-star, it was more a 3-star. As I said here, a trade. I was not emotionally involved. I followed my rules. Everything was good. And I bought that initially at 16.53. I'm not sure if the position got executed completely here. I think it was not a full position. So maybe a 2/3 position. And I had a 6% stop loss on. So 6% is a little bit wider. The stock is very volatile. You can see that here with the ADR percentage. It's 10%, so I needed a wider stop. But I want to give you one thing, and this is important. Usually, the stocks where I have a larger stop loss on, something like 6, 7, or 10%, they are usually the trades that rarely work, to be honest. The trades that I take and that are my biggest winners, I usually have a very tight stop loss on, something like 3 or 4 or maybe 5%. Why is that the case? Very simple. You know, if I have a right timing, if I have a great pattern and also a great setup, they are working immediately. They are not pulling back against me or something like that. And every time when I have to take a big stop loss like 6, 7 or 10%, probably something is wrong. The stocks are too volatile, the market is too volatile, I have to give it some too much room, or I'm entering too late. So this is always a warning sign, and I'm constantly working on that so that I reduce the stop loss and rather get stopped out a little bit more often with a tighter stop loss instead of having one stop out with a bigger stop loss. Why it's the case? Very simple, right? If I try to buy a stock 3 times, the probabilities are a little bit higher that I catch the right moment instead of, you know, buying one time and getting stopped out with a big stop loss. So, you know, I always try to keep my risk very small and, you know, just try to lose the least amount of money, but of course not choking off the stock, so giving it a little bit room to prove itself. So EOSE, fair trade. APLD was a fair trade. I bought that when it moved higher together with WULF, so Wolf, a data center stock, which had good news on the day, and then APLD broke out, rallied very nicely. I think it was also a 2/3 position, and then it got rejected very quickly at a 4% stop loss, you know, very small loss to my overall capital. And that's so important, right? If I take, you know, usually I'm buying 10%, 15% positions. That's a full position for me. But remember that, you know, if I have if I buy a 10% position and I get stopped out for 4% stop loss, I'm losing 0.4% of my trading capital. That's it. Very, very small loss. And if I only have a half position on because the stock is not moving so much into the direction that I'm preferring, my loss will be something like 0.2% or 0.1% of my trading capital. So, and my winners are sometimes 10 times, 20 times, 30 times my initial risk. When I have a 100%, 150 or 200% winner, you can look in the other YouTube videos. In that case, I'm making so much money, it will cancel out all these small losers, right? Hit rate isn't really important for me. It's always about the risk-reward ratio in my trading approach. So APLD was a great trade. I mean, it was a small loser, 4-star setup, A trade. I followed exactly, but it did not work out. LAES or LAES, this one here is not a great trade, to be honest. It was a 4-star base when I initiated the trade, but in that moment, I was a little bit too emotional. I had too high expectations about the stock. I was thinking too much about the money, so it was more a mistake, to be honest. And that's why I also rated the review or gave it a 2-star. 2 stars rating after I reviewed the trade. Why? Very simple. There is not enough consolidation here around the breakout line, which I require usually. And it was a B trade for me because I was emotionally involved, and I'm not sure if it was a full position here, but you can see that here, 10% stop loss. I needed to give it 10% room to prove me right. So, and that is the first warning sign. That's a big stop loss. The most of my winners have tighter stop losses. Keep that in your mind, right? And then automatically, when I place a larger stop loss here, it's also a larger loss to my capital. So then Wolf, I bought that as a gap up trade. They posted earnings or pre-earnings on that day. Very good news. Also 4-star base, you can see it was very tight and then gapped higher. It was a little bit choppy, to be honest, but it was a C trade because I added a little bit to the trade. I was too emotionally involved. It was a mistake in hindsight, to be honest. And so it was a full position. You will see that on the next chart. It was a full position, 8% stop loss. That's another sign, right? You have to give it so much room. And then you can see I got stopped out on a secondary offering on the next day. So it took out the lows of the day here. And then I got stopped out, even if it was above the EMA 8, But when you have mistakes and when you also have a losing trade with a larger stop loss, then it's really a larger loss to my capital. I think I lost 1.2% of my trading capital on that trade. So mistake, something to learn from, very important. It's not very often that this happens to me, but I'm always very honest and I'm always, I'm also a human and I also make mistakes as a trader, but these mistakes are not very expensive. So in the next one, breakout from a 4-star base, very nice base, to be honest, probably even a 5-star base. Bought that one time here, no additions because it was not moving so much higher. I had to place an 8% stop loss, a little bit wide, but the stock is also a little bit more volatile. And it did not work out. You can see that here on the next day, it gapped down and I got stopped out here. And I was trading, in a sideways market. This is why I have so many losses right now. In a sideways market, my hit rate goes down a lot, right? And that's why you see so many fair breakouts here. But it was a great pattern. It was an A trade. I followed my rules exactly, and that's it. So then I retried to get into AVAV. So it set up again. I bought into that with a 4% stop loss. I had to place a little bit wider stop loss. No additional entries because it was not, moving higher so much. In hindsight, it was still a great setup, I would say. 4%, a very small loss to my overall trading capital. It just did not work out. So, and then the last one, STX. I bought that also on the gap up. Very good earnings, very strong theme and group. So data center and also memory stocks. It gapped up here. You can see that I bought into that. The trade was in profit. I bought at 254 the first time, then 3 times more when the stock was moving higher. So I completed my position in that case. I had a 6% stop loss on this thing, and then on the next day or 2 days later, boom, you can see it reverse. And it got stopped out. In hindsight, you can say, it was probably a mistake here because it was retouching, or it touched the EMA 8 here, and the EMA 8 was a support level here. Yeah, that's okay, but you can see that here I sold the stock after it reversed 10%. This is not what great stocks are usually doing if they have a great news, if they move higher on strong volume in a leading theme. They should move up immediately. So the market is a problem right now because the market is so choppy. And it's also tricky to navigate through this market, but I'm helping my members with that. And I'm teaching that since years, how to navigate through this, through the market. So maybe it was a mistake in hindsight to sell that. I would see that. But one thing is important. The best stocks, they will give you many entry opportunities. It's not that you missed the perfect buy point. A couple of days or weeks later, you will get the next entry point where you can buy into that. So it was, it was a good setup. It was a B trade because, I was not sticking to my rules here. And what does it mean? It means I bought a third time here to add a little bit more to my position, and then I got stopped out. So that was more the mistake. It was not that I'm doing or I did a big mistake here. This is how I usually review my trades, and this is how I'm losing very small money, And when you look at the current market conditions, my drawdown from the highs of the equity is very, very small, right? And it's very small on one side because I have very big winners which cancel out everything, but on the other side I'm losing so little money on my mistakes. And remember it. So again, I'm losing money on 60 to 70% of all my trades. So I must be extremely good at losing and only losing very, very small amounts of money. You can also think about that in another way. What I'm doing here is I'm constantly testing the stocks and the market to see if something is working or not. And the market gives me feedback. And for every test, I pay a small fee. And this fee is something I have to keep very low. So if you want to join my Market Update Premium community and join more than 250 of very passionate growth and momentum traders, you can do that 14 days for free. So you can go to my website, you can register, and then you get access 14 days for free to the Market Update Premium community. You will get a lot of educational content there. You will get every day a preparation post. You will see the weekend reports, videos where I go into everything very deep. So there is a lot of stuff there, and you can try it out 14 days for free.